Hey everyone, how's it going? It's John here with Legatus Trading. I just wanted to go over exactly the processes used to capture the daily lows on October the 13th. Hope you guys enjoy.
Still looks bullish, but gotta be careful with the M.
Yeah, exactly. Like overall, its destination is going to be higher than the dump in its origin. And the only thing red about that zone up top is the fact that we're below it. As soon as we get back above it, there's nothing red about it. And it's oftentimes, it'll make one lunge in a certain direction, and then it'll fight that lunge back and start running in the opposite direction. And it's like, okay, well, I think we're doing something similar. I'm absolutely confident that we will catch the move back to all-time high and the move off of all-time high, as we have every other time before. And it's made it a spike. So like, people on the 15-minute now, this is what we look like on the 15-minute. Now, is it not true that our most common reversal pattern has been make a channel, spike out the bottom? What line do we go for next? That one. But you want to know one thing that's interesting is that not a single bullish profit target changes on this spike. In fact, it just enforces the idea that because of this long-term 15-minute spike that we do have, it is just that much more visible to that many more traders that there is a spike and that the trend could potentially be coming to an end. And I want to talk about this blue-white line that we're just tapping right now, because that is exactly the low of the consolidation that we went through. And it's like when we see that we have chop, 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 and we have a channel, and then we bust through the bottom of that channel, that entry typically goes for the top line. And this is just the bottom line. So like if we took the top line of the entire consolidation, connected all the highs, that's exactly where we're going to be going for next. I'm very bullish on it. That's for sure. Overall, we should see some more gains over the next couple weeks. And everybody seems to be very bearish in the world. And that's perfect. Because everybody's usually wrong. It's negligible to those that have exposure to the upside. The key is literally just to remain exposed to the upside. You know, we want this B point up here. Major factor is everything is in motion so long as you have your stop that is profitable on a long trade. Very intrigued by the red yellow line and its ability to get us above the white dashed line above. White dash line. Unbelievably, we're stripping the bears their ability to create an M at the expense of creating a step, which is phenomenal. I'm a huge fan of it. Because like, think about the audacity that it has to have in order to not make an M at this high. You know, it's like, it's got a lot against it, and all it needs to do is break through one last threshold. Now, this was a, you know, something that we've seen on the low quite frequently, but not something that we've seen come from a run. However, they're both associated with major trend reversals. And you want to know what's crazy? Is we're still here on the daily. But if you have that entry, you know what its worth is. And if you get rid of it, you're potentially cutting your exposure to this line right here. This red yellow line from up top here. That major trend break that's associated with getting to this green dash line. The potential move on the other side could be quite lucrative, upwards of 4,000 points potentially. So the value of the long exposure is key. If you get worried about it, hedge it. Don't cut it, because then you're not going to find as good of an entry. It's going to be difficult tomorrow to find an entry because everybody's going to be late. And what happens to people that are late nowadays? They get overlapped, right? And it's difficult for them. And that's the thing. That's why we have to cherish the position and hedge it against it, so that any risk there is, we can reduce with the hedge. And it's not that difficult, considering every single index relatively moves incredibly similarly. the SPY, the Dow, all moving very similarly. And what's interesting is at the same time they decide to move. All at the same time. But the most important thing is just to have exposure. You know, it's not necessary that you hedge. However, it is incredibly beneficial to understand how to and to implement that strategy because it can protect you. And it can also maximize the amount of profit that your core makes because you don't have to drag your stop up so tight, putting your entire position at risk. You don't have to take off as much of your position, meaning that you have to reduce your size, meaning that you get more to where you want it to go. And at the end of the day, the market respects as much as you can possibly bring to where it's supposed to go. That's the name of the game. How much can we get to where it's supposed to go? That's the only thing that we're supposed to be thinking about. Because at the end of the day, once we figure out where it's supposed to go, moving those contracts to that point is the job. But at the end of the day, the elasticity will be still pulling it towards the upside, as pretty much every mean from the past couple months is higher than our current position.
We're at least gonna make like a 2K pop up, right?
I'd say so, yeah. I was looking at 4K, to be honest. 2K definitely will get us to the trend I want to break.
Hey John, I just came on. I'm seeing like the post and the exclusive. We're on a pop up, right? I'm looking at the daily, and
That's right.
yeah, what is this like? I'm just reading people posting up.
Jim Cramer, he's insane for shorting when it's low. That's all I gotta say. If he is doing that.
Those guys, they do long term shorts. They don't do like
Yeah, I know.
daily.
That's what's crazy. He literally is saying like, I mean, I don't know. People are crazy on the internet, but that's the idea that you know he's getting everybody involved with shorting at the very very low of this report. You know, everybody and all of his people, if that post is correct, are all in down there short with infinite loss potential to the upside, as they very likely have shorted stocks and bought puts and so on like that. Like he reversed his what does he say? Reversed his long-term holdings, or his a lot of people are going to be moving around their IRAs and stuff, and it's just going to be a negative thing for them. The red yellow line needs to break. It's necessary. Even any new highs past this point are subject to getting sucked back on the break of the red yellow line. There's no progress past this point without breaking it. And no steps to be seen beyond it, as the current move that we had off the green zone did not cross the high, and even if it did by a little bit, it wouldn't have counted. It needs to actually clear it, needs to actually make a step out of it. But in this case, it was quite obvious that, you know, red yellow line was in need of breaking. Couldn't have said it clear, I don't think. But at the end of the day, if you did take that as a hedge, this is your first profit target right here. There's no hedges that will be made below the white dashed line. That's the way that I look at it as well. Like there's no hedge trades, no short trades are to be made underneath that white dash line. In this case, tomorrow could be a different story, depending on how it moves. Institutional input. And essentially what that is, you know, there's a few different ways that they can get people out. You know, they can stop them out, they can squeeze them out, or they can offer them too much profit too quickly and they sell out quickly. And I think that that's what most novice traders did today. They did not hold, and that's because of the big dump. And I think that a lot of them were given profit so quickly that they sold out. You know, and I think that as a result, you know, it's running because it's gotten rid of a lot of the people that it wanted to get rid of. And as a result, tomorrow when we see it opening sideways, it would make a lot of sense that only those that had the exposure from the low today will be those that can get away with the continuation. Because is it not that way every time? Is it not that way when we have a spike and it comes back to retest the spike? Is it not naive to assume that every single bit of this blast move that, you know, is so, oh my goodness, is not subject to a 78% retracement? Why isn't it? Until we've seen it stop completely, until we've seen it make a flag and up then sideways. Why not then? Because it can, and it might. We have to make sure that we're prepared for it. And at the end of the day, I know how much the market will reward those that decide to hold through any calamity that there is with this trend, or with any kind of, you know, difficulty. It's going to put a test of integrity in the way, I think, and that's going to be the spring. And it's going to seem very strange because at the end of the day, it's true on the daily that we are in the spike. And then this spike could very well be protected in the future. And I don't even care if it comes all the way up to here first and then comes back down. The spike's safe. And what's not going to be is buying that second entry that taps the spike, because it's going to be an 11 low zone and it's going to be terrible. And it's going to be far easier to absolutely forget about your long trade today. Don't look at the profit at all tomorrow, not a single time, and just focus on hedging and shorting every single little high that we can capture. And that is the safest way to maneuver around it, because the thing is the long trades are going to be increasingly difficult. The short trades are going to hold really well, except they're going to be short-lived. But it's not going to matter because you're going to be hedging anyways. That's why they're so easy, because they go down and they hold every step. It's like 1 step to 2 step to 3 step. They're all lower than the next. Every single time it makes it really easy. Lower, 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 lower. That's a little higher, but I mean, it's very forgiving. And then it makes another lunge, and essentially when that trend breaks, everything changes. And it's been a matter of trend break to trend break today. Very clear trends breaking left, right, and center. However, whatever test of integrity there is, the entirety of all the profit contained within this trade is worth the exposure of having a 78% retracement throughout the night and then coming all the way back up and not quadrupling the move, but potentially having exposure to a 4,000 point move. And I mean, like, you don't need size for that. All you need is exposure. And it changes your entire account and everything that you're able to do with it in one swift go. And that is what you want to be going for. Not small, tiny little profits throughout the day, but, you know, an easy 5,000 point profit, where it could translate to easily, you know, $8 to $10,000 per micro. And we're back in that situation. And you know what? If it gives you $2,000, do you care? You know, 2,000 points, do you care? No. It's like, let's go. We're making the big move. That's what we need to do. And if there's something that, you know, happens in the economy or something along the way, then we'll deal with it when it comes, right? But at the end of the day, managing it very particularly to ensure that we maximize as much profit as possible and have exposure to where it counts is key. That's the main thing. Yeah, exactly. And it should be easy to find the shorts for tomorrow too, I think, you know. However, those that are coming into tomorrow and without a long, and they're just simply trying to short, it may prove difficult because it may not be as easy to short it, you know, if you haven't got that cushion. And every single move is supposed to be a short-lived one tomorrow, I think. And that's why I say, you know, is it not far easier to catch the short and take profit down there than it is to be catching the long for the red-yellow line right now? Just imagine if you didn't have the long and you were going for it right now, how difficult it is being about it. I know it's short-term, but it is true. And I tell you, it's obvious that this is what it's going to be doing, but actually getting your contracts in there it seems to be a pain in the ass, because everybody's like they're trying to get you out all the time. And you know, the key is just having endured the last time it did this. You know, what is the next time it does this? Because it ain't coming back to the last time that it's done this. You know, it's just another step in the staircase. That's it. And basically, when I put that in there, it means that everything that that happens beyond that point, you know, is kind of, you know, it's subject to being like wicks and spikes. And you know, it certainly is drawn to breaking whatever trend it is in currently at all times. You know, there's nothing that there's no bigger risk to a trend than itself. So a fake break. I can see that we can apply fibs. Another B point created. And essentially we've worked our way into the node, which is a great node to have the imbalance on, to be honest. Right in the middle. So here we can see that it's very similar to what we've been doing all day. We've got a little bit of a blue line going on there, and it's likely to return back to it. The imbalance is likely to happen somewhere in this general area. The VWAP can be placed down roughly here. Absolutely acceptable. The 261 that we reversed on, also means that we've hit this blue line, which was a necessary movement. At some point, we needed to hit that. The red-yellow line doesn't change. It's another good spot to consider taking some off any hedges if you haven't taken all of it off or most of it off by this point. But at the end of the day, whatever move there is off of these levels, it's likely to be retraced in the grand scheme of things. Anybody that bought late is subject to retracement. And that has been the way for quite some time. And if it continues to be the way, it shouldn't matter, because you can still manage as though it is that way. And if it doesn't pull back all the way, then that's dandy. But if it does, well, having the hedge and the stops necessary are gonna be what protects you. If you've used the profit that you've otherwise gained to get to the high point, to leverage a hedge position against it when there's an obvious trend break. Which, I mean, I would go as far as to say that was a pretty blatantly obvious trend break at the high there, which offered a good hedge. However, you know, one thing that's alarming, doesn't it seem quite easy to hold it? You know, haven't you been dragging it down the steps and taking profit very, very easily? That's because it doesn't last. Enjoy it while it's there. And there shouldn't be much left. You know, having taken most off at the 61 and 261 combo, with the need to get back to this blue line, deja vu. Now that right there, debatably has just been shifted down to here. Any stops dragged above that line are subject to getting tested. And I'm like, well, we got a huge triangle here. If it wants to play triangle for the imbalance, it can. I can't deny that it's allowed to. However, you shouldn't be doing anything about it, if you want my honest opinion. The idea that right now it's for hotheads right now. Like, you know, we've had so many other amazing moves. There's no need, if you're in nothing, to do anything with this. But learn from it and observe it to the best of your ability. That's what I would suggest.
Maybe another inverse to take her up higher.
Yeah, I'm very curious to see what they do with this imbalance. You know, it could be quite erratic. And that's another thing too. If one is just long and they don't have anything as protection for this, you know, you want to make sure that you have a stop. You know, make sure that your stop isn't above this blue line, because it's probably going to get hit at some point. But then again, if you don't have a position, you could hedge before, like within the next 7 seconds. If you do make a hedge, make sure it has a tight stop, and you know, it gives you exposure to the blue line down below. And right now, if you took it, drag that stop into profit. Boom. And you're done. You take some off right here. But at the end of the day, that's meant to be a short-lived trade. If it's not, then Bob's your uncle. Should be interesting to see overnight. However, the blue line, I mean, it's like, can't not get the blue line. The blue line. And then we immediately look.
How do you even draw that blue line?
Well, it's a little abstract, I would say. But the idea that we have a consolidation and then we break up from it, it wanted to come back to it. The one thing is that's exactly where it was supposed to go. It wasn't supposed to go any farther at all. And that's what's interesting about that, how particular it was. And it's like, yeah, if you drag your stop above that level, look what you just got sniped. If you don't have the absolute particulars, then, you know, you're going to get sniped sometimes. And it's like, that's rough. Because, like, what was that? It's just tiny, like, for all of 2 milliseconds, it came down, just sniped everyone out. Now it's back up. Why? Just because anybody that doesn't follow the strategy of, hey, you can't have your stop above the blue line, gets stopped out?
We've seen that quite a few times today with these highs.
Yep.
Always goes to an inverse head and shoulders and bumps up.
The inverse head and shoulders have been a lot more effective than the head and shoulders, I've noticed as well. The head and shoulders have been prone to failure. I can't recall many inverse head and shoulders failing, though. It's likely to take back whatever rally that it gives past this point in the form of a morning dump, perhaps, but the key is just to hold. Basically, whatever shenanigans it throws at us tomorrow can be hedged, and And so long as that we make sure that we're exposed to the trend in question, no matter the difficulty, we should be able to endure it. And the reward is worth whatever profit that there is on the table right now. In my opinion, at least. Not that you have to give it up, just saying. And with 1 minute left till the close, we can see that we're ending in a consolidation, which is quite triangular. The blue and white line, is honestly working like a support level. We're going to see that break overnight as well. It's very likely, the trajectory being too steep and consistent for any overnight move on top of such a drastic run. But it's likely that they're going to have a test of integrity, so we have to keep that in mind. And whatever test of integrity they do have isn't likely to come all the way down to the entry. However, having a hedge in play to be able to protect against that is ideal. And they've been relentless about that. There's been very minimal time where it's been acceptable to hold the short. They're trying to protect that right now, from what it looks like. And there's been very minimal time that they've allowed anybody to remain short for the blue and white line without being exposed to a loss. But with that being said, here's the VWAP and the close, essentially, right back into the middle of it all. And yeah, no, it's gonna be quite interesting tomorrow. I'll hope you guys have a wonderful day, and I'll catch you guys later.
Thank you, John.
Yeah,
See you
take it easy.
guys.
Thank you, John. Take
Yeah.
care, guys.
Yeah, take care.
Thanks, man. Thanks.